US. Let's talk about supply side when it comes to iron ore, some of the prices there. We're seeing the metals getting a bit of a push higher overall today. Iron ore in certain places in Asia are up above $100 a ton again, as we see maybe some support from the Chinese real estate sector. But overall, the steel makers out there, some of the world's top, have been under pressure because China's COVID lockdown has been curtailing demand on their side as well. Pleased to say Majestic Steel USA is leading distributor of steel products here in the US and a provider of supply chain solutions across North America. Todd Leebow is with us. He's the CEO of Majestic Steel USA. Todd, always fascinating to talk to people who are on the cutting edge of supply chain and really what's going on in terms of ultimate demand. What are you seeing at the moment? You've had some reprieve with iron ore prices, but what does it look like from, first and foremost, a supply chain issue in the US?
Yeah, steel prices have been at historic highs since COVID. However, over the last 90 days, we've actually seen prices pull back significantly, a little north of 30% just since the end of April here. So we are seeing prices pull back for a lot of different reasons. Like you said, iron ore prices are lower, China's slowdown, other raw materials as well. And we're seeing buying activity slow down. I think that it's not necessarily a sign that demand has slowed down yet. However, buyers are being cautious given where pricing levels were and where inventory and import levels were at.
How much of this has to do with the supply chain and the perception that some of the supply chain risks will ease over the next 12 months?
Yeah, I think that there's been overcompensation both ways with the supply chain. I think that people were afraid that they were not going to be able to get steel during COVID, and then the Russia-Ukraine invasion kind of doubled down on that. And so buyers were buying forward, which were pushing prices up and pushing lead times out. And now we're seeing it overcompensate the other way, where buyers are actually not buying probably what they need and buying less than they need to destock. And so what we're seeing is the market be a lot more volatile because of this. So we're seeing buyers probably overcompensate both ways due to the supply chain disruptions that we saw. But then also, no one wants to get caught carrying steel at historic high prices as well. So we've seen buying activity slow, which then people are destocking their inventories.
And Todd, let's talk about where that buying activity is slowing, because we heard from Cleveland-Cliffs last week, yesterday was Sunday, that is this nation's second largest steelmaker, saying that really they're softening U.S. building demand, sounding concern over construction. I'm curious if you're seeing the same sort of red flags.
Yeah, we're the largest spot provider of steel into the construction and manufacturing sector for our niche products. And so typically we see it first, we see it pick up first, and we see it slow down first. And so because of that, we've started to see in the construction market, those that were looking to get out in front of it to make sure they had steel. And maybe, you would hear that the reason why a project was delayed was because of steel availability, or the reason why the cost was elevated is because of steel. That's not as much the problem right now. It's other probably supply chains that are impacting that, not steel. So steel lead times are shorter. So we're seeing the slowdown in the construction market and the manufacturing sector. But I just want to clarify the difference between, buyers are slowing down. However, there's still some demand in terms of backlog from what they previously had taken. It's new orders coming in that we're seeing probably being impacted the most.
Todd, what about your own input costs? And, we hear of aluminium smelters, for example, having to sort of turn themselves off in certain parts of the US, as we've seen in Europe, because power prices are so high. How are you dealing with your own costs?
Yeah, so on the inventory side of input costs, our inventory costs are high because the market's been elevated. But then on the non-inventory side of it, we're dealing with rising costs across the board, right? So I think that's the challenge here is, how do you manage, labor costs are up, logistics costs are up, everything's up, while we're also facing a down market. So the steel market's been cyclical for many years. I think that it's probably a little bit more extreme today than it has been historically, given the swings that we're seeing. So you just got to manage through the cycles, but I think that we'll continue to manage through it and watch to see what happens in the back half of the year.
Lots of really interesting signals, sort of moving parts in the labor markets. You mentioned that labor costs are up, and we've got, from one day news that union power is rising to the next day news that layoffs are rising. Where do you see the labor market right now for steel specifically?
Yeah, it's still tight right now in terms of certain jobs. It's also by location. So we have plants throughout North America, and it's really region specific, So, we're looking at it based upon every single plant location and how we're managing that. I think that we might see the labor market ease in the second half of the year, given what you mentioned in terms of some layoffs that could be coming down the pipeline. I think that this is a challenging market that we're in right now because the labor market has been tight and there's an inflationary environment. And so you got to really think about all the different factors that are influencing it. So, we're managing through all of that and really looking at it particular to each location because it really is also location specific, even though the general markets are pointing towards certain directions.
And Todd, we don't have much time left. Curious to hear your thoughts on the strong dollar, though, how that factors into this conversation.
Yeah, I mean, typically it has an impact in terms of the import-export market. I think right now with the market volatility, pricing swinging so much and so fast, I think that, buyers are keeping it short. So they're staying closer to the market. And so that's kind of taking away from the import-export market that we typically see. So right now we're seeing a decline in interest in imports just because of, where is steel pricing going to settle? And then also what does that mean in terms of just the overall markets globally? So, I think we're just watching it closely. I think there's a lot of variables that are impacting the markets today, as you guys have been talking about all day today, probably more so than ever. So, you got to stay tuned.
Well, we'll stay tuned with you, we hope. Todd, come back. Really great insights as to what you're seeing across the entire industry group. Todd Leebow, Majestic Steel USA CEO. Stay well. Meanwhile, still ahead, more on the commodities conversation.